All right, good morning, everybody, and welcome to the stock market update. What is today? Tuesday, June 28th, and we have a lot to talk about because yesterday the S&P 500 went down again. So is the rally over here? Today's focus will be the consumer confidence. So that's coming out, and we'll talk about this. We also had Nike report earnings, and that's what everybody was looking at because want to see how consumer confidence is doing because it's being released today. And then also banks raised their dividends, but not all of them. So we'll take a look at this. Plus, we'll show you the trades that we considered yesterday. Anyhow, if this is your first time here, hi, I'm Markus Heitkoetter. This is my head coach, Markus. Together, we have more than 48 years of trading experience. And every morning, we go live here on YouTube to share with you what you need to know as you head into your trading day. If this is your first time here, I know it can be a little bit overwhelming, but don't worry. We have a special video just for you that I'll link to in the description. And that's a great place to get started. All right, Mark, yesterday markets were down. So what do you think about this? Is this rally over? I mean, it looked good. It looked like we had a rally. And then yesterday down 0.3% in the S&P, 0.74% in the NASDAQ. What are your thoughts?
This was nothing. What is the rally over? Is it a bottom? I mean, that's to be determined. But after such a great week, this is to be expected where you pull back just a little bit. I think that pulling back the amount that it did was actually a positive. S&P sitting right around 3,900. So a pause in the move is definitely to be expected.
Yeah, and if you look at the 5-minute chart of yesterday, we see it was just a whole bunch of nothing. I mean, here after you said it, Friday's massive rally up. I mean, this is where we see how little the markets moved. If we zoom in, it looks very, very big. But here, not a whole lot yesterday in a very, very tight range. Just waiting for any sort of impulse or just taking a breath here after this rally that we had.
Exactly. I mean, things don't really go straight up.
Right. So that's actually pretty good news. It's actually good news. And talking about news, I mean, there's not much on the economic calendar. If we bring it up, so yesterday we had durable goods that were coming in a little bit better than expected, and that was a kind of almost good news or bad news. We talked about this with our mastermind members because it basically means that the economy is still strong, which means that the Fed is probably going to keep aggressively raising interest rates, which means rising interest rates is not good news for the markets. But it's like, okay, think around the corner, right?
Yeah, exactly. And then this morning, there's another one to keep an eye on:
So that
consumer
will be
confidence.
the consumer confidence. Let's talk about this for a moment.
Yeah, so we see the previous reading of 106.4 and the forecast at 100, and so this will be considered after consumer sentiment was the lowest on record.
Right. And now it seems that, well, we'll see what happens there. This is why I think it was important to know how is Nike doing. So Nike reported earnings yesterday. Nike, a retailer, that's probably where we get already some idea how the consumer confidence is. And this is where we also get an idea what kind of guidance they're providing. We were talking about it yesterday. So I believe that the markets will drift higher this week and next week. And once we get into earnings season and companies are reporting how this whole inflation and higher interest rate environment is affecting them, this is when we might be in for a rude awakening. And so therefore, yesterday, we had a big company, Nike, reporting earnings. And let's talk about this, Mark.
Yeah, so they're down pre-market, but they did report better than expected quarterly profit and also revenue. Their inventories were up 23%, and this showed that the company is still trying to balance demand with supply chain concerns. Traders also a little bit concerned about overall sales in China and Nike's inflation exposure, as well as foreign exchange issues. They also said that the forecast was slightly lower because of increased promotional activity and ongoing disruptions in its profitable China market, which was definitely in the spotlight.
So this where suddenly China comes back into play. I mean, we haven't heard much
Yep.
about this. We know that they were battling COVID cases there. And this is why they implemented the zero tolerance policy, locked everything down. And we haven't heard much out of China because recently everybody was focused on inflation here in the US, higher interest rates. But this seems to come back a little bit right now.
Yeah, I mean, you have things being produced in China, but also money being spent in China. And today, or maybe it came out yesterday, there was some good news on uh, the quarantine uh, requirements
Yeah.
that helped casinos.
So what exactly happened there?
Yeah. So we see stocks like LVS, Las Vegas Sands, which we both have a position in, jumping pre-market with China easing their COVID-19 quarantine rules for international arrivals. I think they cut it in half. I think it was 14 days and they dropped it down to 7. And investors liking that move. LVS, what's that up right now?
8.2%.
Yeah, I mean, nice move there. A win also higher.
Yeah, Win also up here this morning, almost 7%. So big jump because, as we know, especially LVS, I mean, their main business right now is on Macau. And in order to get to Macau, you need to travel. And this is where it's good news if especially travel restrictions are being eased. All right. Well, with not much
Yeah.
on the economic calendar, this is where right now a lot of focus is really more on individual stocks, right? I mean, that's the story because there's not a whole lot going on just overall. So let's talk about what else? We had the banks and the stress test.
Yeah, so the Fed, they do their stress test once a year. This was put into effect after the 2008 financial crisis, just making sure that they could withstand recession-like environments. And they did pass, which means that they could release some of their reserves. This is typically done by increasing dividends or actually buying back more shares. And several major banks raised their dividends after passing the tests, including Bank of America, which you have up,
Right.
uh, Morgan Stanley,
Yeah.
MS is the ticker, and then Goldman Sachs, GS.
Yeah, Morgan Stanley up 3.5% this morning. Bank of America and Goldman Sachs up 1.5%. But it's really surprising. Not all banks did it. Even some other banks who passed the stress test said, "Nah, we're not participating in the stock buyback program or the raising of the dividend." One of them being J.P. Morgan.
Yeah, and in previous times, sometimes there's a little more. They were a little more aggressive with that move, but J.P. Morgan and Citigroup specifically said that increasingly stringent capital requirements force them to keep their dividends unchanged.
Right. So they're still up 1.5% because they're participating in the overall move here in the financial sector. So it's not that they're down. It's just interesting to see how banks are handling it differently. All right. Now, another stock that we should talk about is Robinhood. I mean, yesterday up 14%. This morning, pre-market trading down 2%. So big news for Robinhood yesterday.
Yeah, and this is where we talked about this a while ago. At what point does Robinhood fall enough where it gets attractive for other companies to buy it? Like a big broker like Schwab or even Interactive Brokers or there's IG as
Right.
an example. And Sam Bankman-Fried, I believe his last name, his FTX. There was rumors that they were looking to buy uh, Robinhood, which would essentially double the brokerage, I believe. But then this was kind of put to rest temporarily because he said that there are no active M&A conversations with Robinhood right now, and so
Yeah,
that's why
so
it's
you
down a little bit.
you poured some cold water on these speculations. This is why we are down. But I mean, just down around 2%. There's still some excitement, as you said. I mean, they're trading at a price where they could become very attractive for some potential mergers and acquisitions here.
Yep.
All right. So we already said economic calendar, not a whole lot going on. Pretty much also not tomorrow. We have Fed Chair Powell speaking again, but I mean, right now we have a lot of Fed members speaking. So tomorrow we have Mester speaking, we have Powell speaking, we have Bullard speaking. But I think the big one will be on Thursday with the core PCE price index. And again, today, as said, the consumer confidence. These I think are the two reports this week that could move the markets and should also, it's the end of the quarter. So there might be some rebalancing, and especially if hedge funds are sitting on cash, they might actually buy just to say at the end of the quarter here that, hey, we are not that much in cash. We are invested in the market. So we'll see. There could be some buying coming in today and tomorrow.
True. Although it's, well, not that window dressing doesn't happen on a down quarter, but a pretty nasty quarter. Wrapping it up, though.
Yeah. So, I mean, no big change in our positions. We didn't do much yesterday. So Bud already sold the calls. I was assigned at 54. I want to see if at some point this week I might be able to roll the calls. If not, I'm okay getting called away on Friday. NVIDIA yesterday, with the markets not going anywhere, didn't do a whole lot there. Also just sitting there. TPR, not much going on, but there were two stocks that we were considering, but we still decided against it. Let's talk about those. So one of them was Skechers, SKX.
Yeah, this one caught our eye yesterday. With the way that the markets were moving, it wasn't a big down day, and that's when you usually see a lot of good candidates when trading the wheel, when you see those pullbacks. But yesterday, this one caught our attention. We see that there's a strike. I think even it was a little bit lower at one point yesterday. So near support, trading in a little bit of a controlled range, but not as perfectly sideways as I would like to see.
Right. So this is why we passed, but this was kind of the best of the bunch together with Visa. Yep. We also looked at Visa. We have been trading Visa before. It came up on the scanner yesterday, but the strike price that we saw was just a tad too high for us. So we like to sell always at or around support here, and we see support, the lowest close indicator, is indicating around 190. Maybe I would go up to 192. It came out at 197.50. I think yesterday at some point it was at 195. This is why we flagged this as a maybe and wanted to see, okay, do we have a possibility? Because I've been doing really well with Visa this year.
Yeah, I really like this chart a lot better. And this was my favorite chart of the bunch that popped up. It was really just that the strike wasn't where I wanted it to be. Agreed. It did show at 195, but I'd like it lower. I think last time you traded it was 187.50. And in this market environment, I mean, you could wait a day and get your strike that you want.
Oh, yeah. Yeah, that's why we flagged as a maybe. We still have a whole week of trading, and then next week we have another week of trading. And so there's opportunities every day. All right. Very, very briefly, I wanted to show something that the dev team has been working on. A new release of Forex Optimizer that we are releasing towards the end of the week. And I'm going to show it to you right now. What we will have there is an earnings calendar. And you see, usually companies on an earnings calendar, they just say, when is the next earning, right? And maybe what was the previous earnings. But here is what we do. We show the price move reaction probability on the 7th day, on the next closing day, and the historical EPS performance. What does it mean? It means that you have kind of an indication of how this stock has reacted in the past. So we're looking at the last 20 quarters here, and we see that Apple, as an example, moved up 13 times on the next day after reporting earnings with an average of 4.5%. Now, it also moved down 7 times with an average of 3.6%. So it seems that for Apple, it is more likely to go up after reporting earnings than going down. Here's the price move reaction probability on the 7th day. And we'll add the average price in here as well. Now, this is where I want to go to Nike. Because the question is, okay, could we have known how Nike would have performed? And you see, we already have the data here that was released yesterday. And we see that historically Nike has beat EPS or the estimations 11 out of 12 times, moved higher 11 out of 9 times with an average of 8.5%. So I think that's pretty cool, and I think this will be helpful, especially when you're trading the wheel and you are in a position where you want to know, okay, earnings are coming up. What should I do right now? Should I protect this? And we see all of the information here that we are gathering. I think this will be awesome. This will be super, super helpful. Don't you think, Mark?
Yeah, good stuff. I love it.
All right. Anyhow, so if you would like to learn more of how we trade these crazy markets, we'll have a video for you right here. We have to jump into the call with our mastermind members right now because we are trading with them live every morning. But hey, we'll see you again tomorrow morning, same time, same place. Until then, have a great rest of your day.
Happy trading, everybody.